I work with the Infrastructure Bank. We are a bank set up specifically for infrastructure development. And our focus essentially is everything infrastructure, even though we have key focus sectors like transport, like power, housing, municipal development, those key areas that we consider very, very important towards stimulating and fast-tracking economic development. We look at others on an opportunistic basis. So, I was fortunate to hear the panel, and I think they've spoken to quite a lot of the things that you like to hear. So I will just focus principally on just our experience on how people can access government funding. And I'm also glad that CBN is here, so that will make it a lot easier for me because I was going to make reference to a lot of them. And I'm aware that I'm speaking to a group of young entrepreneurs, and one of the key things that questions that will be going on your mind is how do we get funding for the things that we want to do? That's always a question. And in my years of experience, I always tell people, it's not the money first. It is your concept, your project, and the last panel, they've dealt extensively with that. I'm sure you're familiar with the term bankability, something that a bank can finance. That's the simple meaning, what a bank can finance. And, you know, everything has to be, so from keeping records, from being structured, from, you know, having a concept that is sellable, you know, and even you, the promoter, being solid enough, convincing even to any investor. All of those things put together is what, you know, goes into bankability in simple terms. So all of those things are important before you start looking for the money. Because more often than not, we start looking for money and then we go back to do the house cleaning. It usually takes a longer time for any investor or any lender to look at you. So quickly, like I said, this thing is insight on accessing government funds. Next slide, so quickly. So the contents, I'll just do a brief summary, executive summary. Then we'll talk about institutions in Nigeria that are managing government intervention funds. We'll talk about some of the specific government intervention programs, challenges that SMEs are facing in terms of financing strategy, and how to access some of these funds. And then we'll give a case study of one of the funds that we manage on behalf of government. And then we can conclude. So that maybe, I hope at the end of it, you will have understood some of the how to pitch yourself and how to access some of these funds. So essentially, you cannot do business without money. It's important that you have access to funds, whether it is your money or other people's money. So it's important to have money to be able to do business. And governments generally, they've come to understand that the small and medium enterprises, as well as even the micro enterprises, all working together are very vital for economic development. So governments in different areas have come up with policies and strategies to be able to do what? Help that sector in order to be able to sustain, you know, economic growth and development. So the Nigerian government is not an exception, and they've come up with different kinds of policies over the years, rich policies over the years. And I think part of the challenges that some of the MSMEs face is the fact that they don't even understand some of these policies. They don't even understand how to access it. So I'm speaking expressly on just government intervention funds. I could share some other experience with respect to our business as it relates to funding. So please, you can just keep scrolling the slides. Here we have the what I call the Public Mass Transit Revolving Fund, which is a fund that the Infrastructure Bank manages on behalf of government. CBN has different kinds of intervention funds, more specifically that are applicable even to youth and MSMEs. So it is important to, in as much as the government is doing so many things, it's important that we identify those things that are beneficial to us and to our businesses. Because I know for some of us, we may not even have the funds by ourselves to be able to say we want to start, to be able to begin to put your things together. So we need to, first and foremost, even check the comprehensive list of all of the things that government is doing and be able to see how we can take advantage of that. So there's an exit loan, there's a trader money, farmer money, all the money things that the government is doing. There's a National Youth Intervention Fund. There's just different kinds of funds available that the government has made available. So the next one is just talk about institutions, different institutions that are managing intervention funds. So this is just a pointer to guide us in where to look. It's not exhaustive, so it helps us to begin to think as to the different areas or different agencies that manage intervention funds for government. So on this slide, you have just a list of some institutions or agencies that manage government funds. First, there is Infrastructure Bank. Like I said, we manage a 25 billion naira transport intervention fund. The fund is specifically for mass transit. So acquisition of buses to, carry passengers from one location to the other. If that is the kind of business that you're running, then you can expressly get in touch with the Infrastructure Bank with respect to intervention for funds for transportation. That is for moving infrastructure, that is buses that carry high-capacity buses. So, of course, you have Bank of Agriculture, you have Bank of Industry. I'm not going to elaborate. I'm sure you are aware. I'm just mentioning so that it helps us. Of course, the mother of all is the Central Bank of Nigeria that is doing this through different agencies. You have the Development Bank of Nigeria, you have the Nigerian Export-Import Bank, and of course you have SMEDAN. Next slide. Next slide just talks about some of the programs that have been identified. So you have the SMEEIS. I'm not going to speak extensively on all of those, so I just need you to know these programs so that you can access them, you can, evaluate them and see how it helps and how it can, help to put your businesses together or catalyze your businesses. So you have the SMERRF, which is like a restructuring and refinancing. You have SMECGS, Enterprise Credit Guarantee Scheme. You also have the Power and Aviation Fund, which the CBN came up with, years back, for specifically to help in the power and the aviation space. So you have next slide. So you have a listing of all of this. So I'm just going quickly to, there's a particular slide where I will dwell on, and so I'm just rushing through. Next one is challenges to SME financing strategy in Nigeria. So one of the challenges is lack of access to sustainable funds, which is what I'm trying to address by saying there are certain funding available besides the angel investors or your banks that will lend you money. There are certain other sources. Government funding usually come at subsidized rate. It's not at market rate. Part of the challenges is also poor governance structure. I think that has been dealt with from what was said at the last panel, where you do not have a proper structure. And because of that, it becomes difficult for you to be able to access funding even where it is available. So poor or inadequate record keeping. For any business at all, you have to keep records. You have to keep records. And as far as you're looking to attract funding from anywhere, you have to have your accounts audited, have your account prepared in a way and manner that is acceptable in the marketplace. I listened to one of the ladies talking about separation of your accounts from your personal account from the corporate account. So there has to be record to show that this is a business, a separate entity on its own, being managed, profitable on its own. So majority of do not keep records, and some because of tax evasions and all of those things. So if I'm an investor, if I'm going to lend you money, I'm going to invest in your business, I want to see that you're not contravening any regulatory laws or rules. So taxes that are meant to be paid are paid appropriately. That is, if you've gotten to the point where you're actually in business and you're generating income. So all of those things are quite important for you to be able to attract the requisite funding. Then there's also the issue of where you have some perception, based on our experience. Like I said, we manage a fund. So you see some people come with the idea that government money is free money, is a grant. If the scheme is not a grant, it is not a grant. If the scheme is a fund, maybe a revolving fund that you have access to, it means you have to pay back. That fund will be useful to other people. So these are part of the challenges that SMEs have. The poor, the non-performing loans, for instance, in some of these schemes, the rates are quite alarming. So this is another challenge that even the implementers of these programs face, and it makes it difficult for them to continue to provide all of these funds. So we'll go to the next, go like 2 slides. So in terms of the summary of challenges facing intervention programs in Nigeria, this has been well articulated. I went through a document, Applied Journal of Economics, Management and Social Sciences, and I thought I could share with us and speak through this particular schematic. It's not exhaustive, but it gives us an idea of the challenges that, both the providers of funds and the beneficiaries of the supposed fund, the challenges that they face. So if you look at the topmost row, you see challenges facing program implementers. So in this case, government. In the case of Nigeria here, we're talking about government. They've rolled out different kinds of intervention funds, different kinds of sector-specific funds to help, stimulate economic activity, to help, grow, to help MSMEs grow their businesses. So these are part of the challenges that, government have faced. So there's high risk of loan default. High risk of loan default. There's so many things that are responsible for loan defaults. But one of it is what I've mentioned earlier, where you do not want to pay back. You think the money is free. You take the money and you don't have no intention whatsoever to pay. So there's nothing anyone can do. If the obligor is not willing to pay, the loan is going to be bad. You will not have there's nothing you can do, even if you go to court, maybe to the extent of the assets that are available. If you are an implementer of such a program, it defeats the purpose. It's meant to be a revolving scheme. You take the loan, you pay back, and then others can access the loan. But if we all take the loan and we don't pay, then there's a problem. Then the government will have to keep on continuing throwing money, and that is not accounted for. So there's also the issue of poor state of infrastructure. We're all aware of the challenges we have generally. It's more difficult to do business. A similar business of yours that is situated in a clime with a better infrastructure will have lower operating expenses. Cost of doing business will be much lower. So if the cost of business is high, your chances of even making a return, decent return that will keep you committed to the business will be lower. So all of these are part of the challenges that then there's poor communication and coordination. Sometimes I think the government can also still do more. In addition to pushing out these intervention funds, there can be a lot more awareness campaign for people to be able to take advantage of this. So there's poor identity management system, poor targeting and planning. So all of these are challenges that the implementers face. Now, if you look at the second row, talking about challenges facing targeted beneficiary, which is you and I who are trying to access, these government-related loans. So there's poor program awareness, because not all of us are aware of all of these things, of all of the opportunities and the things that government has put in place. Lack of transparency in program. Sometimes these things are done in a way that before you will even apply, it's as if people have been pre-qualified, even before the program comes online. So when they tell you to go and access something via a network, the network is never up for you to be able to make applications. So these are part of the challenges, and it's also good that CBN can also, as part of maybe feedback in arranging some of these things, so that people can take advantage, because really they are beautiful ideas as designed by the government, even through the central bank. But I think we need to do a lot more so that we can feel the impact. There's also prohibitive collateral requirements. I mean, this is, you have to be careful with collateral requirements. And I spoke earlier that most of the government intervention funds, they come in the form of a revolving scheme, whereby it has to be sustainable. So a pool of funds is put together that will be made available for, they could decide that the scheme is going to run for 30 years or for 50 years. If we all access these funds and we don't pay back, then the entire purpose is defeated. So because of that, to cure that, to ensure the safety of that funds, that is why you have a collateral system that helps at least the fund manager or the government to have a recourse to something in case you do not perform. In simple banking or in simple lending, you do not just lend. It has to be, there's something that you can fall back on. Besides the project itself that can generate sufficient funding to cover the loans and yield certain returns to the owners of the business, you also have a backup plan, which is where you have collateral. Because history has shown that a lot of people, where nothing is at stake, they take the monies and then they disappear. And then so you do not have this pool of funds functional. So which is why you have these collateral requirements. But I think over time, government has come up with different ideas on how to make it easier. There are some schemes, even from the CBN, CBN can still speak to that. Some are even, depending on the structure, are without, there are certain conditions. So the collateral requirements are not as high or as stringent as others. So by and large, you have eligibility related issues. Who is eligible, and sometimes it's age prescribed. They may say between 20 and 35. Sometimes they may say you have to be, so there's eligibility issues. So you have poor business plan and knowledge, and that speaks to all of us. If you are trying to attract money, you have to have a good business plan. A business plan that shows that the project or the concept is bankable. So your projections, your market study, all of those things has been done, and it's not just done by you. You have external parties who are reliable, who are known in the market, certifying, giving authenticity to the business planning that you've done. Because I won't lie to you, a lot of business developers or project developers are sometimes overtly optimistic. It's your business, it's your idea, it's your concept. Sometimes you hardly can see anything that will go wrong with it. But if you have someone else look at it independently, professionally, they can give you, good criticism with respect to how to improve, so that there are no revenue leakages, there are no issues that are not been, or risks that have not been mitigated. So it's important to be able to do that. For instance, if you are facing a panel of investors and you want to sell your case, it has to be a case that is compelling, because questions will be asked as to what are the issues, what are the risks in this particular business. And if you are not able to convince them how these risks have been de-risked, I don't see them going further with you. So it's important that a good business planning is done for that to happen. The other thing is insufficient knowledge of how to apply, which is part of what I've been talking about in the last 10, 15 minutes. You need to identify those particular programs, and you need to check the specific requirements and how to go about them. Sometimes they direct you to a certain website. Sometimes they direct you to a certain office to go and make inquiries. So you need to know the requirements of accessing a particular fund and prepare all of the justification required to be able to do that. So next is to talk about how to access it, and I'll just give an example of the TIB managed fund, which is a 25 billion transportation fund. Now this fund essentially is for mass transit, like I said. So the way it works is you are a transporter, you come to us and say, oh, maybe let's use Lagos for as an example. Pardon me, I don't know Lagos too well. I'm in Abuja, so let's just say Lekki Ekpe Road. You have like a few buses plying that road, for instance, and you come to us and say, oh, this is what I need 5 buses, maybe Toyota Hiace 18-seater, 20-seater buses. And we look at it, we look at your projections, we look at is it like a concession route? Is it that Lagos State government has given you concession in that place? Or you are just the regular, so it's a different scenario. I'm sure you understand what I'm trying to say. I may not go into the details. I'm just using that transport as an example. So we look at all of that. If you are able to scale through all of our credit requirements, then what we need to do is we instruct one of the approved vendors. And such vendor will be directed to supply you with the X number of vehicles. Now, once that delivery is made, the total value of that vehicle, of those vehicles, become the loan that you'll be paid back. And that is done. The loan is at 5% interest rate, which is absolutely interesting. So that doesn't even require any down payment. But there are certain documents that you need to provide, audited accounts of your business. You need to also provide some sort of guarantee. We have to. This is not TIB's own doing. It is based on the investment policy guideline for the fund. So, which is why I'm saying when you're looking to how to apply, you need to understand the specifics of that particular fund. So, in this case, the guarantees that the fund require is either you bring a bank guarantee or you bring an insurance credit bond as a way, as a collateral that the bank would have. If you are able to meet all of this, the loan is disbursed in the form of vehicles, and you begin to pay back over 3 to 5 years as approved by the investment policy guideline. So essentially, that is it's just a case study for the fund that we manage for the government. So I think in general, before I conclude, in general, I've spoken to the issue of business planning. I've spoken to the issue of record keeping. I've spoken to the issue of for a startup, no matter how at what stage you think you are, documentation is key. It is important for people because depending on which investor you are looking at. If it's an equity investor, then it becomes a bit more even interesting because the equity investor really wants to know what he's going to be commingling his own resources with, what he will be inheriting, or what he will be, the moment you have a stake in a business, both the upside and downside, you're also exposed to it. So record keeping, because it will also come, and I think one issue that I didn't hear mentioned or question that I didn't hear raised here is something I've also observed with Nigerian promoters. A lot of Nigerians are not willing to, they are very averse to dilution. They are very averse to dilution. Oh, it's my idea. It has to be me. I have to, something has got to give. You know, 5% of something functional and beautiful and profitable is better than 100% of something that is just not that is dead on arrival. So I think there's a mindset. I've dealt with promoters, investors, and when it comes to, you can speak every other English, you can, yeah, I've done project planning, I've done business planning, I've done this. When it comes to the issue of stake in the business, we just seem to be very, very averse. And I think if somebody is willing to invest in your project as an equity investor, I think you should embrace it, provided you are guided by a professional so that you are not also cheated. In terms of from valuation perspective, when they are beginning to value your business, you yourself must be able to have, an idea when it goes to negotiations. What is the value of your business? So which is where you also need the help of experts. It's not just sufficient to do a business plan and just do projections. You must be able to quantify what is the value. What is the value of this business? So when you're having discussions with equity investor, you are also not cheated. Because some businesses just start. Because somebody else comes, takes over the majority stakeholding, the man that is cheated feels frustrated, who also is the brain behind the business in itself. I don't know if you understand where I'm going to. So it's important that we have an open mind, be professional about it. Important thing is for the business to survive, for the business to be profitable. Like I said, 5% of a profitable and a very solid business is better than you own it 100% and you cannot do anything with that. So it's important that we look at that. If you have the money to be able to do all of it and own it 100%, so be it, which is good. But if you don't have the money and you have to get funding from people who have this funds, then you must be open, but at the same time professionally guided, so that you're not cheated. So essentially, in conclusion, the challenge is facing us, facing intervention funding. It's a lot, but we talk about so many of them. I risk of loan default, politicization of the intervention programs. When we begin to do that, so it's only your tribal people that have access to it, even though when they don't have a solid business plan. Just because they are your plan, you make loans available to them, and then the return is never guaranteed. So high bureaucracy in the application process, low level of awareness, so lack of transparency in the system. So for those of us who are business owners, our own challenges are essentially there are diverse kinds of intervention funds available. We just need to do research, we need to check, we need to take advantage of these ones. Yes, we thank God for the fact that we have angel investors. We thank God for financial institutions that will make loans available. But some of these intervention funds, I really think that we should take advantage of them. The ones we have done, several state governments, several privately owned transport companies are taking advantage of them. They finish paying, they come back again. It's at 5%. I don't think you can get it any better in the market. So I think that will just be all. If there are any questions, I will do that.